Good morning. Good morning, everyone. Good morning to you all. Okay. Who's on the call? Good morning, Mayowa, Sarah, Oladipo, Ola,
Good morning, everyone.
Savage. Who again?
Good
Mr.
morning
Israel,
to
Victor.
you all.
Good morning. Chibuzo, Baba Aliu. I greet you all. Welcome to today's TDA. So quickly, I will be going through one of the pairs I have a trade currently running on. That's gold, right? So I'll do a breakdown of gold this morning. That's used to be our good master's pair, but luckily I'm trading it this morning. And so I'll be looking at gold as one pair and then Euro GBP as the second pair. I have under setup on that pair too. So quickly on gold, like we've rightly said since last week, from the weekly time frame, overall bias still remains bullish, right? On gold. You see the overall bias is clear from the higher time frame. We see has been creating multiple higher highs and higher lows, right? And then when we come to daily time frame, what are we seeing? So on daily time frame, we begin to see something very unique also, as also stated, right? So after price created this last high, printed the high, which is around 2,147. We've seen that price has not cleared that again, has not printed a new high for us. Instead, what do we see? We see price now beginning to create lower lows, lower highs, lower lows. Let me zoom in so it can be clear. So what do we see price do? Price has been creating multiple lower lows and lower high after seeing this first high that was created. Of course, this was due to the war, Israel and Hamas war, that printed this. But then ever since then, we've not seen price created a new high. Instead, what are we seeing? We are seeing price creating multiple of lower lows and lower high, lower lows, lower high, lower lows, lower high, lower low, lower high, which is suggestive that probably we might sell a little bit before we continue price to the higher side, right? So which means for us to say completely that gold is bearish or gold is bullish, we have to see this guy cleared, this guy cleared, this guy cleared, and also potentially this a print of new high, right? And reverse for the case, if we are seeing goes to short to the downside, we want to see this downside that has been marked by our gold trader since yesterday, since the beginning of this week, actually. So we have to see this place cleared off and then see from there we can now confirm on daily time frame that okay, we are bearish on gold. We are bearish on gold. So what am I saying personally? So I saw that was yesterday. Was it yesterday now? Last week Friday when Lincoln was analyzing gold. I saw that opportunity. Personally, I trade market structure and liquidity. So I saw that opportunity for a sell on gold last week. And I've been on that sale for a while now, though the entry was quite early. But then I'm looking to see what the market does. So last week we saw price did something very funny. There was a sweep of this. Let me increase this place. Okay. There was a sweep of this previous high, right? Price swept through this previous high, and then what did we see? We saw that sharp to the downside. Another lower high was created, right? And then we saw further down that price broke this level, the structure level, right? To the downside again, went up, another lower high, and then broke it again to this downside. If you can see this Wick broke all through this place. And what did I see? With my setup, it's called market structure and liquidity. So I expect price to come all the way to this place here, clear this liquidity, tap into this other block, and then sell up from there. And that was what we saw clearly yesterday that happened. That was what we saw clearly yesterday that happened. The price tapped into this other block. Of course, there was this 15-minute order block that was also tapped into to scale down. 15 years, this other block on 15 minutes, we saw price tap into that level sharply, and we saw that rapid drop to the downside. If I had entered on, say, 15 minutes or 5 minutes, of course, I would have gotten my 1:3, but then I don't trade lower time frame. Personally, I'm more of a swing trader than even day trader. So we saw that tap into that zone, and then that sell-off yesterday. Yesterday, we saw gold sold even up to this level, right? And then I'm seeing the trade, currently looking at the trade also to see how I can maximize it, either to close out or to hold. But what is giving me the assurance to hold or confidence to hold is this structure I'm seeing over here. Market has been in kind of a range, right? It has been creating multiple, and then this support level held. Like, I don't just know what is happening. That support level is so strong. Market has tested it so many times. It's refusing to break. Like, it's supporting price literally. So, but we have a news on USD by, I think, 345 today. So we are expecting that to either push gold to the down. If the news comes out positive, that will mean gold will be tanking to the downside. And if we see the news negative, of course, the buy or yes, the long position on gold resumes, and then we should be looking for opportunity to buy further to the upside, right? That is one thing I'm looking at gold this morning for. So personally, I'm in a sell. I don't know what will happen. I'm not the market, but then with my analysis and everything I've done, personally, with analyzing the market, I'm looking forward to sell gold further today. And however, the market is what it is. You can choose to do whatever it pleases to do. So that's what I'm seeing on gold. Overall time frame, we are overall biased on gold. We are seeing that we are still bullish on gold, right? On weekly, on daily. But then potentially when we come to scale to the down to the lower time frame, that's the H1, H4, begin to see some, sell opportunities here and there. So that's it for gold. Box structure. Yes, something like that. Box structure. Of course, this box structure played out even yesterday on gold also. If you use box structure, say on 15 minutes, it will have been a very clear sell. Like, it would be a very clear sell for you. However, personally, I don't use box structure. I use a variation of that, which is market structure and liquidity. So that will be all for gold. Please, if you have any question on gold, you can begin to type in the chat section, in the comment section, and then I'll respond to that. The second pair I'm looking at this morning, let me do a quick breakdown of that pair, and then we just move to DXY and the rest. Is Euro GBP, 0 GBP. Wow. I don't know who marked this out, but this guy just gave an expo. I don't know who did this job. Well, probably I'm the one, I don't know. But I would say somebody leaked this thing out. You guys are literally staring at my setup for free. So on the daily time frame, this is what we are seeing, right? Price has been bullish for a while, and then of course overall from weekly we saw it has been selling, right? Has been bearish overall for weekly, but we begin to see price printing higher highs and higher lows, higher and higher lows. So market structure and liquidity says that price will come back to clear the last low before the sweep. This is literally my setup being explained here. Price will come to the last low before the sweep, sweep this liquidity point, and then begin to move to the upside. The overall target for this trade will be typical of, hold up this. Coming, 1 minute. The overall target for this trade will be here. So risking 31 to make approximately is looking at. So risking 31 pips to make at least 230 pips. That's 1:7.5 R. 1:7.5 R. But typical of me, I'm a 1:3 trader. I don't have that patience. So 1:3, I'm out. Whatever the market does, of course, we are good. So this market will not, this won't be the trade that will break or make you. So you can just take what you have and then move. Even on the gold trade too, I've seen 1:1.5, but then at least if I'm going to exit that trade, I should see 1:2 or 1:3. That is the according to my plan, that's the RR that makes sense, that makes a lot of sense. So looking at this trade this morning, this is what I'm looking at on the higher time frame. This is basically my trade on the higher time frame. And if I scale down to the 1 hour, it's still the same thing, right? We saw price swept through this structure, and that's one thing that gave us confidence that this place is going to hold. Let me give you this insight, right? For you to know a structure point that will hold, you have to see that it clears liquidity, right? A structure point that clears liquidity is that point that we hold in the market. And that's the same logic behind the box strategy too, the box structure strategy. You see, we have to see a clear sweep before we buy or before we sell. So that's the logic behind this trade setup. Quickly, and to the 4 hours time frame is still the same thing. Price is still dancing around there. Sorry. So it's purely the same thing across board. H4, H1, all time frame is still the same for this particular setup. So I'm patiently waiting. I'm patiently waiting to see price come all the way down for me to take this trade. This is practically all I do in the market. This is the only setup I have. This framework is the only setup I use to trade the market. I don't see any other thing. I don't see any other stuff in the market. To just scale down, you might want to just look at this price point. Yes, look at this price point, this OB, order block. Probably to just reduce the SL. Might reduce it to probably 30 or 25. Yeah, I think this trade is 30 pips SL. So you might want to reduce it. This will help you reduce the SL to 28, 27, thereabouts. But like I said, this is all I'm looking at for the market this week, unless I see any other thing happen. But this is practically what I'm looking at in the market. So guys, if you have any question, please let me know before my colleague comes to analyze DXY, GU, and EU. If you have any questions surrounding, looks more like a sell or distribution in daily, that low may be cleared. Which of the low? You mean this one or this one? So the idea behind this trade setup is this, right? This low might be cleared, but truly speaking, 8 out of 10 times, this low will not be swept immediately. You will see that reversal, at least 1:3. At least 1:3. You will see that reversal, at least 1:3 before it now becomes cleared. Typically, you can backtest this thing over and over across all pair, and you will see this thing I'm saying for free. And it's, price is fractal. So anything that happened on the higher time frame happen also on the lower time frame. Yeah, good for short term. Of course. That's why I'm not holding to this place, which is not bad if you can hold. But I mean, once you see 1:3 from a trade, why just exit and then, or take at least 80% off from that position and continue to allow it to run. That's the word, allow the trade to run. Once you've taken 80% position off the market, you can allow the rest to run so that, you want to maximize the whole move, the entire move. So thank you guys. That'll be all for today. I'm handing over to CJ Banks for GU, DXY, and EU analysis. Thank you.
Hello and good morning, everyone. Hope you're having a wonderful week already. So we're going to be looking at DXY, as sadly mentioned, and we're going to be analyzing it to see what is left for the remaining part of the week. We're in the midweek. Today is Wednesday already, and we want to see what we have left. Okay, so on DXY, let me take this guy out. So on DXY, we had an objective on DXY, and it was a short objective, right, to sell DXY all the way to this level. That's what we've been looking out for. Let me do as if I don't see what people wrote on that chat box. So you're calling me market maker. Let me just pretend I don't see anything there. So we are looking at having DXY somewhere around here, but we know that we cannot tell price what to do. We just set our levels and we'll be expecting and anticipating that price is going to make its way to those levels. All right, so this particular level is what we set out for DXY this week. And from the look of things, it has not traded into it. Instead, it shied away from it. We were having hopes of that playing out when we were seeing price breaking structure to this downside. All right, price was breaking structure all the way to this downside, and we were having hopes that we're going to see price somewhere around here. But instead, it rested off this this week right here. After resting off this week, we saw the push back to the upside. So it's looking like DXY on the short term may not be able to come back to this place, right? So it's looking like it's willing to fully resume its buy trend. Okay, taking a look at it on the daily, we are seeing that on the daily we're having bullish momentum, although this swing now looks like what the next resistance for DXY. Okay, that is this swing high right here. Okay, so this is looking like the next resistance for DXY. So two things that I would want to see on DXY. First is that it continues to trade and goes to break above here. So that is our buy objective. Currently, the buy objective is what is playing out on DXY. The second is that you may want to grab liquidity and come back here because this point of interest is really interesting. All right, we'd want to see DXY all the way to this place. All right, one more liquidity sweep to this place and then move up. If it doesn't do that, then it's going to continue with this buy objective. Already DXY on the hourly time frame, we are clearly bullish on it. Okay, so it may continue with this bullishness going forward. We want to see DXY break this level. Okay, for so many reasons we want to see it break this level. All right, so two buyers on DXY. If it continues being bullish, we are trading it all the way up here. All right, if it's stubborn enough to give us that liquidity sweep, it's going to come and break here. But currently, I'm seeing that DXY may start retracing from where it currently is now. All right, I'm expecting a retracement on DXY to the upside from where it currently is. Now, we have a couple of news releases today. The PMIs are coming out today. All major countries or currencies, yes, are releasing their PMI. Major countries are releasing their PMI today. We have from the Euro, we have the Great Britain, we have the US, and a few others. And then we also have Canadian bank rates coming out today. So there's a lot of fundamentals to inject liquidity in the market. Okay, so I'm seeing that this current sell-off is a sell to buy. Okay, so when the news release starts coming out as earlier as 9 a.m., we'll start seeing them coming out. Once they start coming out, I anticipate that DXY will start finding liquidity to move back up. Okay, so that is for DXY. Now, on the euro side of things, the euro, like we said the last time we saw, we're clearly bearish on the euro. Okay, we had some very short-term bullish runs on the euro as well as GBP. But as it stands, our bearishness on euro and GBP is resuming gradually. Okay, so looking at the daily time frame of the euro once again, we said our target is this swing low right here. So we'll keep going short on euro until we get to this swing low. All right, so this is our target for the euro. So we're continuously going short on the euro in line with the weekly and monthly time frame, especially for those who have not been joining the top-down analysis for the past couple of days. In line with the in line with the weekly and monthly time frame, we are going short on the euro. Okay, so the 4 hours is giving us that hint. All right, we had 2 points of interest while we were buying the euro. I'm just saying this because we didn't look at the euro yesterday. So we had 2 points of interest for the euro. First one was this. Let me extend it to the right. All right, first point of interest, second point of interest. All right, and then price came to the first one and reacted off. Now we've seen a clear sweep to the downside. So this is the level that is currently holding the euro. So this is the level in the euro, and we would want to continue trading off this level all the way downwards. Okay, so for intraday, we'll be looking at some rejection from this level. You can see that there is a clear breaker block right here. Let me mark that. Our price has traded into it comfortably right here. Okay, and let me signify using a red. All right, so price has traded into this level. So we'd want to see reversal signatures around here. We want to see our reversal signatures around there. Of course, we will have to include sentiments to know which of the pairs to pick, especially between GBP and euro. All right, once the play is about to happen, we'll have to go back and refer to sentiments to know which one to pick, because we will not want to just be trading the two of them blindly. We want to know which one is going to deliver the most. Okay, so from this level where euro currently is, I want to start seeing reversal signatures, and I'll be willing to short the euro. Shorting the euro, I'll be trading it all the way to this green line right here. Right, there is a very wide fair value gap that the euro created sometime in December. We'd want to see price return to this other block that was one that sent liquidity. Sorry, the other block that sends price all the way up, we want to see price return to that level right here. Okay, so for the euro, I'm willing to short it all the way to this downside. Okay, I want to see, like I said, my sell signatures printing out from where price currently is. So as it stands, I'm having a short bias on euro, and I'm willing to go short any moment from now. I'm just waiting for my trigger to show up, and then I'll go short on the euro. Possibly around 9 o'clock, we may see a sharp move to the downside on the euro. Okay, between 9 and 10 a.m., we should see that sharp move to the downside. Okay, so that's for the euro. Now for GBP USD, we've been anticipating this sell all the while. Although we've been buying, if you remember clearly, we've been giving out buy markups and trade calls since the beginning of this week rather. Last week, we were anticipating a sell on GBP USD, but it showed us that it wanted to buy some more. So we were buying on GBP USD until yesterday. All right, so our sell setup showed up on GBP USD. Just for context, the weekly and monthly time frame of GBP USD, we are clearly bearish on those. So what we are hunting for is a bearish continuation on the daily or the 4-hour time frame. On the 4-hour time frame, we've seen the continuation sign of the bearish continuation sign on the 4-hour time frame. On the daily time frame, we were waiting for the same thing to show up on the daily time frame. Okay, however, we're not going to fold our hands and watch the market. So we took some buys on GBP USD from last week. You can see some of the buy positions. We took some buys to the upside on GBP USD. And as at yesterday, one of the levels that we marked for GBP USD to break off from, which is here, right here, we're expecting GBP USD to break this level and return. And it has done that. Currently, we're short on GBP USD. We're looking at about 50 pips as the target. Okay, so GBP USD has returned to this place. We marked it sometime yesterday. And on our student groups, I think it was Opemi that showed that markup. I saw it late last night, couldn't reply. So on the student group, one of our students also saw that same bias on GBP USD. Okay, so it shows you how much of a value that our students are getting. The same thing we are seeing is what they are also seeing on GBP USD. So that was Samuel James and Opemi, but they had different students had the same view as I did on GBP USD as at yesterday night. So our views are beginning to align more. All right, so we are going short on GBP USD from where it currently is. Our entry signature printed out sometime earlier this morning, and we are already short on GBP USD. We are aiming 50 pips or this low right here. All right, we are shorting GBP USD from where it currently is all the way to this low right here. There is an overall target to the downside, but for now, we just want to get this and we're off the market maybe for the rest of the week or until we see another entry signature. Okay, so for GBP USD, that is as clear as we can give it to you right now. Okay, so we want to see GBP USD clear all these lows all the way to this downside. Okay, there's a much more bigger objective, which is somewhere down here. So we'll keep shorting GBP USD until it gets to this level. All right, so at this point, we can start entertaining your questions while we look at the fundamental releases for the day. You can start asking your questions right now. All right, so as around 9:15, between 9:15 and 10 a.m., we're going to be seeing PMI releases for France, Germany, I think Italy also are going to release theirs today, all in the Euro-based region. So we're going to be seeing the PMIs released today, and then around 10:30, we're going to see that of GBP. Then on the Canadian side of things, we're going to be seeing the bank rates being released today, and as around the same period, 3:45 p.m., we're going to be seeing that of the US. Okay, so all this we're hoping is going to inject liquidity for us so that our trades will move in our forecasted direction. Okay, so you can start asking your question. Good morning, sir.
Good morning, good morning, good morning, good morning, good morning. Good thing morning. So questions, please. You cannot hear me? May I never be silenced. You cannot hear me? Can anybody hear me? You cannot hear me? If you can hear me, please comment.
Can't hear you still.
May I never be silenced. Okay, I think it's a hub thing. Everybody else can hear me. Okomiko can hear me. All right, so good morning.
Okay, we can hear you now.
Good morning, everyone. All right, fantastic. I said, may I never be silenced. May my voice never be silenced. All right, so first of all, let me report myself. I went to take a trade yesterday night. As this leaving of your laptop open, just close it. Just close it. I went to take GBP sell. I've been looking for GBP USD and GBP JPY sell. I said, let me check what the Switzerland people are doing. That's how the thing knocked me out. And then finally it now came my way. So I said, it's well, who is trading at night? Where is the volume coming from? Where is the liquidity coming from? But when I looked at the market and I didn't see anything to trade, I went to go and press what I shouldn't press. So now I'm trying to rebuild and recover from that. But it's not revenge trading. So I'm just saying this so that you guys will know that it happens to the best of us. That's why some people say close your laptop. Once you don't see any signal, just close your laptop. As I was pressing the trade, I said, where is the liquidity coming from? Where is the volume coming from? And I still pressed it, and that was it. So yeah, I just shared that with you. I've not broken my rules in a long time, but I don't know. GBP has not been doing me well. All right. So when I heard your analysis this morning, CJ, I said, where was I? Where was I? If I was on the floor now and I took that trade, I'll have to be explaining to you people why a trade showed up in the night. So yes, that's just to let you know that it's not everything in trading that is a knowledge thing. Sometimes it's an accountability thing. Sometimes it's an indiscipline thing. The goal is that whatever lesson you learn, try not to make sure it's a lesson you can bounce back from easily, not a lesson that you pay a dear price and pay a dear consequence where your progress for months, you just give it back on one trade. All right. So I didn't do that. I still followed proper risk management and everything. But still, it wasn't an ideal setup. With regards to the JPY pairs, I'm still trying to interpret the UEDA and the yield curve control on the yen. I'm also still waiting for bonds to reflect. I'm waiting for bonds to reflect demand for the yen. Right now, we don't see any demand for the yen. If we start having interest rate cuts, then it will make the yen more attractive. But in the absence of that, the yen is still not attractive to traders because of the negative interest rates that we are trying to deal with. So that's what I'm looking at. Everything you said, I concur. There's not much to say. I'm just refining my liquidity levels. I'm just refining to see the possible places where entries can be taken from. I'm also trying to reduce my entries, to minimize my entries, because the more you trade, the more you lose. That's normal. The best types of traders are the traders who don't enter too often. That way, their risk to reward ratios can be very, very high, and their win rates don't have to be as high. But when you trade frequently, if you don't have a very high win rate and you're trading frequently, you will gradually lose that account. Okay. Yeah, so because it bonds and bullion correlation, exactly. You know how it is. So yes, that's what we're waiting for, bonds and bullion correlations. All right, so over to you guys. There's not much to say. Over to you guys. Cheers, God bless. Except someone has a question for me, direct question for me. If not, back to the floor. No question? All right. Have a great day ahead. And please, going forward, if some of you are reading certain books that are helpful with your trading, you can put it here. Right now on the floor, we're currently reading Global Macro Trading. What else are we reading with regard to the markets?
I think it's that glue.
Bronze Donnelly. And Bronze Donnelly's books. GBP JPY. Okay, nothing has changed with GBP JPY. I was thinking that the news yesterday would trigger the market, but it didn't, in the sense that the market just flipped to the upside. Exactly, that's it there. So we've had our FU candle. Let's analyze it. That's exactly there. That's the shoulder. That's the liquidity sweep, right? My only challenge is the follow through that I expected. CJ has done GBP USD. He did a perfect job. There's nothing to say. The follow through that I expected on GBP JPY after that shoulder. You see, it tapped into the shoulder and all. Tapped into that shoulder, the liquidity sweep, but the move to the downside, ferocious move, it didn't. So we can see that the support is still holding. That support is still holding. So there is just a range now. There's a range at 180, from 187 thereabout to 189. There's just a range. Now, some people may want to play into that range, right? I'm being a bit careful because I don't want to be going in and out, in and out, in and out. I want to catch a clean move, 150, 200 pips, and know that, okay, I've done well for myself. So that's my issue right now. The fact that the pullback was not strong. You can see it there. You can see the indecision there, the range that is there. So at least let me see that level being cleared. If I see that level being cleared, then I can now ride to the downside. I'm looking at 4 hours as my reference for GBP JPY. You put it on the 4 hour. That's why I've not seen any clear entry. You see what I mean when I say I'm looking for at the 4 hours. If you are looking at 1 hour, 15 minutes, there have been trades. There has been enough opportunities, but I'm looking at the 4 hours. So I've not seen that clear move to the downside that can tell me that, oh, okay, let's take this trade. However, now we are seeing stopper shocker on the 4 hour. The last 3 candles, we are seeing stopper shocker for today. Those of you who know what stopper shocker is. So I'm looking at that. But like I said, I didn't see the clear move. It didn't close clearly below for me to get a good entry. All of this is an accumulation because of the fair value gap that was formed in January. But that push to the downside, I've not seen it. They still want to trap traders. But yes, I'm still short on GBP JPY. I'm waiting for bonds to show sentiment and confirm the move. Bonds haven't confirmed the move yet. So we're still in accumulation. And the problem with accumulation is you get stopped out. You see liquidity sweep to the upside, liquidity sweep to the downside, and you get stopped out. Except you want to be doing in and out, in and out. I don't know if this is helpful, Solomon. Because Solomon asked that question. So let's see it on 15 minutes. Let's see it on 15 minutes. Okay. All right. Okay. So if you look to the left, between 6 to 12 yesterday, that's what is giving me cause for concern. That whole region is what is giving me cause for concern. There's liquidity inside that place. Between 6 to 12 p.m., that whole region, that support level there is what's giving me cause for concern because price will struggle at that place. So every time price taps into a liquidity inefficiency, into a fair value gap, we're supposed to see a momentum move, a momentum response, because it's grabbing liquidity. And liquidity is the fuel for volatility. So when it taps into it and I don't see that push down, I'm like, why is this happening? It's not me, they'll trap. That's what happened yesterday with GBP CHF. Let's see GBP CHF. That's what happened to me with GBP CHF. I'm trying to still answer Solomon's question. And at the same time, Moyo, sorry, because all these pairs are correlated. Is this helping anybody or is not necessary? So because of what I saw on GBP, exactly. That's exactly what happened with GBP CHF. You see what happened? Because GBP CHF 2 has not cleared its own lows. You see that support level there, right? Between that same 6 o'clock yesterday, you see the strong support at the base, the triple bottom. Exactly, 1, 2, 3. 1, 2, 3. Because it has not broken it, I sold into that level, and then you see what price now did. It went all the way, tapped all the way up, right? And then now still came back down. And then it's still dilly-dallying at that support. So sometimes, even though you are trading schematics and you're trading systematically, you have to look at the volume, the move. When it's not giving you what you want, you know they have not finished accumulating orders. They are still creating liquidity. So let me see that support taken out. And that support is there across board. It's there on GBP JPY. It's there on GBP USD. All right? All right, then. Thank you very much. Over to you guys on the floor. God bless you.
Thank you very much, sir. And
All right.
thank you very much, everyone who joined the live call today. We hope you got enough value. We also urge you to trade cautiously and apply proper risk management in your trade. Until we meet again tomorrow, make sure you're following us on our various social media platforms and both the corporate account and our individual accounts. You see all those on the chat box. If you have any inquiry on any of our products, please make sure you reach out to us via WhatsApp and we'll be sure to respond to you promptly. We still have our various bots for sale, and then we have our prop passing service is still up. We also have our various courses. As you can see in the video, the live feed here, you can see some of our students who were able to make it down to our trading floor here in Zaria. And if you want to be like them, but distance is a barrier, don't worry, we got you covered. You can take any of our courses online at the comfort of your house or your office without disrupting your normal activity. And we also have a self-paced course that you can also take and then monitor your progress on your own without the pressure of finishing at a certain time. Okay, so until we meet again tomorrow,